Nona Peltier is here with the business update, and it's not looking good. You're wearing red, and there was a sea of red in the markets today.
It sure was. But look, it's quite dramatic, but it may not be the end. It's not a terrible story because the volumes were relatively light, and that means that people weren't dumping their shares.
Right.
They were probably just taking some profits.
Okay.
So that's, I guess, on the upside.
Yeah, that's good.
There's there's some positivity in this.
We need that spin.
And don't forget that when markets are down, that's a good time for bargain hunters. There's always the upside on every story. In this case, though, we have seen a big fall. 3.6%, that's huge. Now, we look back because the last time we saw a fall like this was a couple of years ago when Donald Trump was elected president of the United States. Yeah, the market fell about 3.3% that day. But we had to look back a long way to find a worse day, and we went back, believe it or not, to 9/11, 2001. Wow. On September 12th in New Zealand, we had a drop of about 5%. So that gives you some idea of scale and size. But look, it's across Asia, it's across Europe, and of course, Wall Street too. We followed that lead down. And so we opened down. Australia also opened down. And you'd expect that there's a lot of things going on that would make people feel a little uneasy. And also, interest rates have been low for a really long time, and now they're on the rise. So a lot of people have been shifting their money out of shares and into bonds because that's a traditional type of investment for retirees, people looking for fixed income. When interest rates rise, this is a good time to put your money into a bond market, and that's often what we see, and this is what we've seen over the last few days, that movement there. And also, the other thing that's been weighing on the market is the trade wars between China and the United States. We've seen that escalate. That's not helped things. That's a story we've had for a while, mind you. And then the other thing is that the International Monetary Fund has come out and warned about growth, economic growth. And we've seen that here too. We've had negative business sentiment. And so all these things together weigh on the market, and you expect a correction. We were really quite high, at a record high for quite a long time. So when we say we've moved down, well, we've moved down to the level we were at in June. So overall, context is important.
Yes.
And it's not a time to panic.
Good message. We're moving to the housing market now. The data indicates changes to the government policies already making a difference. What are we seeing there?
Interesting, yes. Okay, so it turns out people buying properties as investments have become more picky. They don't want to buy properties that don't have, for example, good insulation. That's one of the issues that the government's cracking down on. They want to see rental properties, the condition of them to be improved. That's a regulation that may come into force. And there are other regulations that may come into force that are making investors with rental properties think twice about whether they still want to be in that market. So some of them are looking to flick them off. Other people are saying, well, I'm not too sure I want to buy this. So that's giving first-time homeowners, buyers rather, an opportunity to get into the market. Whether or not they want to buy those crummy properties, who knows?
Well, they might not be so crummy, some of them.
Well, some of them might be all right, they might be okay. I don't want to judge what's on the market there. Interestingly, though, prices overall were up nationally, steady in Auckland, but sales volumes were down. And so that was kind of interesting that there was a slower start to spring, and that was because we saw volumes down in July, and of course it takes about 6 weeks for prices to, sales to settle. But hey, listen, the real estate market was, I spoke with one of their spokespeople, very upbeat, so thinking that things are going to be all right over the summer months. Right. We'll have to see.
Okay. Anything more on the markets?
Not much, really. What can I say? Okay, just to recap then, we closed down 3.6%. That's a drop of 330 points to 8,721, and we were at 9,051 yesterday, so that gives you some idea there. Volume was not too bad. The value was 137 million when I was last looking. Our dollar is holding steady at 64.7 US cents, 91.5 Australian, and 48.9 British pence. And by the way, there were 4 stocks that were up. So
there you go. All right.
It wasn't all red.
I'm sure you'll have more positive news tomorrow.
Oh, it's
we'll
hard
bounce
to beat
back
today.
Thank you. Nona Peltier there with the latest in the business world.